As you're aware, the credit crunch is upon us, and most property investors are following the crowd and waiting for the market to pick up before they start or continue investing. This is giving the serious investor a big window of opportunity, and until the media decide that the credit crunch is over and start telling us all that it's over, and all these enthusiastic amateur investors return to the market, the deals we're getting at the moment are better than ever. So, in the words of Warren Buffett, be greedy when everyone is fearful, and be fearful when everyone is greedy. We're currently still in a declining market, so when is the right time to buy? Well, my answer is now, providing you get a positive monthly cash flow. The number of investors that say they wish they'd started buying in 01, 00, or at the bottom of the previous dip is amazing. From my own experience, I purchased a council right to buy property in 1983 for £18,330. I sold it in 1989 for £65,000. The property then dropped in 1991 to around £45,000. By 2006 it was worth £185,000. Now it's dropped down to about £165,000. If I was to buy it today, I would be offering around £120,000. So it may drop a bit below £165,000, but I do not believe it will drop anywhere near the £120,000 that I would be buying it for if I was buying it. I can buy it at that sort of price because of my network of contacts. It would never ever be put on the market for £120,000. If it did so, it would be sold in now to another investor. By 2010, 2011, I predict that the price of that property will be back up to around £165,000 and rising fast to who knows where. So there is a long-term trend for continued growth, but there are cycles within that long-term trend where you can maximise your capital growth. For instance, my mum and dad bought their first house for £4,000. I was recently speaking to Dolf de Roos. He's a billionaire investor. Try googling him. He's been investing for 33 years, and I asked him a question about the current market. His answer was along the lines of, when the market is in a boom, the herd will never think it will end. When the market is in decline, the herd will never think it will end. But one thing is sure, we will have some more booms and some more busts. But overall, the market will increase, and historically, property has outperformed every other investment. Add that to the gearing you can achieve, because even in this market, the banks will still lend against property. Investing in property outperforms any other investment by far. So, the best time to invest, and the time when all the serious investors buy the most property, is when we're in a declined market, while it is a buyer's market. He said he's been waiting enthusiastically for the current market and will cash in by buying multiple bargain properties. Once the market turns back into a seller's market, he said he will slow down again. Now, if you read any of Robert Kiyosaki's Rich Dad Poor Dad's books, he says exactly